Imagine the euro climbing steadily against the dollar in a market that's anything but boring. This is the thrilling reality for euro to US dollar traders right now, where technical signals are screaming go bullish after a decisive wedge breakout. But hold on, here's where things get really spicy. What if the Federal Reserve throws a curveball and keeps rates steady too? Let's dive in and unpack it all, step by step. The euro is currently holding steady against the US dollar on this Tuesday, feeling the weight of a resilient greenback amidst a relatively quiet market environment. As I write this, euro to US dollar is hovering near 1.1607, taking a breather after a remarkable 6-day rally that pushed it to 2-week peaks just yesterday. Tuesday brought no big US economic announcements, so trading activity stayed low-key, with investors barely reacting to the preliminary Eurozone inflation data. These numbers revealed that the harmonized index of consumer prices climbed 2.2% year-over-year in November, edging up from October's 2.1%, while the core HICP held steady at 2.4% year-over-year compared to the prior month. And this is the part most people miss: the diverging parts of monetary policy are really steering the ship here. The European Central Bank is broadly anticipated to leave interest rates untouched at its December 18th gathering, paving the way for a potential upward trend in the euro. On the flip side, US financial markets are buzzing with expectations that the Federal Reserve will cut rates at its upcoming policy session next week. This contrast is fueling the broader narrative, potentially giving the euro an edge. From a technical angle, euro to US dollar looks promising after breaking out of and retesting a falling wedge pattern, a bullish chart formation where prices consolidate in a narrowing range before shooting higher, signaling accumulation and potential upside momentum. For beginners, think of it like a spring compressing before releasing energy. The price is now consolidating, setting the stage for another surge. The 100-day simple moving average, SMA, a trend-following indicator calculated by averaging the closing prices over 100 days, remains a ceiling for immediate gains, while the 21-day SMA acts as a sturdy floor of support. To lock in more bullish action, we'd need a decisive move above that 100-day SMA, with the subsequent hurdle around 1.1700. On the bearish side, slipping below the 21-day SMA could dim the short-term outlook, tilting it toward neutral to slightly negative. Momentum tools are backing this pause, but they're whispering that buyers are slowly taking charge. The Relative Strength Index, RSI, a gauge of overbought or oversold conditions, has bounced above 50, indicating mild bullish momentum, and the Moving Average Convergence Divergence, MACD, which tracks the relationship between two moving averages, has flipped positive around the zero line, with emerging green bars on its histogram suggesting a cautious uptick in momentum. But here's where it gets controversial: is this divergence in central bank policies a recipe for sustained euro strength, or could US data surprises flip the script entirely? Looking forward, upcoming economic events this week from both Europe and America could inject fresh energy into euro to US dollar. In the Eurozone, keep an eye on Wednesday's Producer Price Index, measuring changes in the prices received by producers, and the HCOB Composite Purchasing Managers Index, a survey-based indicator of business activity, followed by retail sales on Thursday and the employment change, quarter-over-quarter, plus final Q3 gross domestic product figures on Friday. Across the Atlantic, Wednesday's ADP employment change, an estimate of private sector job growth, and ISM Services PMI, a measure of economic activity in the service sector, will be front and center, while Friday's personal consumption expenditures data, a key inflation gauge that influences Fed decisions, could offer more hints about future rate moves. US dollar price today. The table below illustrates the percentage shifts in the US dollar relative to other major currencies today. Notably, the USD emerged as the strongest performer against the Japanese yen. USD Euro GBP JPY CAD AUD NZD CHF 0.02%, 0.14%, 0.33%, minus 0.11%, minus 0.25%, minus 0.05%, minus 0.10%. Minus 0.02%, 0.13%, 0.31%, minus 0.13%, minus 0.27%, minus 0.07%, minus 0.12%. minus 0.14%, minus 0.13%, 0.16%, minus 0.26%, minus 0.41%, minus 0.20%, minus 0.24%. Minus 0.33%, minus 0.31%, minus 0.16%, minus 0.43%, minus 0.57%, minus 0.38%, minus 0.42%. 0.11%, 0.13%, 0.26%, 0.43%, minus 0.13%, 0.05%, 0.01%. 0.25%, 0.27%, 0.41%, 0.57%, 0.13%, 0.19%, 0.15%. 0.05%, 0.07%, 0.2%, 0.38%, minus 0.05%, minus 0.19%, minus 0.04%. 0.1%, 0.12%, 0.24%, 0.42%, minus 0.01%, minus 0.15%, 0.04%. This heat map displays the percentage changes among major currencies against one another. To read it, select a base currency from the left column and a quote currency from the top row. For instance, choosing the US dollar as the base and moving horizontally to the Japanese yen shows the percentage change for USD as the base versus JPY as the quote. In simpler terms, it's like comparing how much stronger or weaker one currency is against another over the day. Greenish tones might indicate strength, while reddish ones show weakness. What do you think? Do you believe the ECB's steady hand will outshine potential Fed cuts, or is this just a temporary bullish blip? Share your views in the comments. Let's debate the future of euro to US dollar.